Welcome to Financial Fitness. My name is Dave Rogers with Continual Shift. Make shift happen because in life, shift does happen. And I've got Alex here with me today. How are you, Alex?
I'm good. I'm good. How you doing this morning?
I'm doing great. Congratulations on getting started with your investing fitness and to start to get involved in the markets. How's that been going for you so far?
Yeah, no, it's been really interesting. It's been a lot of fun. I like to go to the casinos a little bit and like to gamble, and this kind of seems like a measured form of gambling. So it's very nice that way.
Well, fantastic. And again, the journey's been about a year when we first started talking about stocks. And I've got some slides today that I'm going to be sharing with our viewers and listeners. And again, financial markets and you, it's this section today is for people who are sort of 28 to 35, which I think you're now perfectly in that sector. Is that right?
Getting close, getting close. November, I will be 28, so we're
Fantastic.
getting
So
right in there.
again, you've had a big year where you got married, you bought a house,
Yeah.
changed some jobs, and now you've started your investing in the stock market. So fantastic on that. So when I've talked to you, it's like you are the center of your universe. What you're seeing from your perspective is very much unique to you. And that's one of the things that's so important to be aware of when you are investing.
No, definitely, definitely. It's really important to obviously choose investment portfolios, I think, that are centered around you.
And
Um,
that's great. And it's fun. And hopefully
yeah,
you're having fun with it. I think that's the key.
exactly. No, exactly.
So this idea that you can be confused and you don't know where you're going, yet by you getting invested and starting to put money in the market and regularly invest and starting to study a little bit more about stocks, how's that making you feel?
Yeah, no, at the beginning, definitely when we started speaking about a year ago, definitely like the picture there with all the twists and turns, because I had no idea really much. Like I had some basic knowledge, but when we would start talking about dividend yields and stuff like that, I had no idea. Now when I do my research, it is much more targeted. I'm not necessarily just looking at companies that I specifically know and specifically use. But now it's like looking at things like that, like dividend yield percentage and the lows and the highs, and trying to figure out if it's a good time to buy now, or if it's maybe this stock's already at its high, maybe I should wait a little bit on that.
Super. And this is a thing we're looking for is to go from confusion to clarity. It's not about being 100% certain, yet by putting a little bit of money in, you get definitely a more of an energetic charge around it, a little bit
Hmm.
more involvement. You notice
Hmm.
it. I think when you were saying this past week, your portfolio is up 2.18%, and there's a
Yeah.
bit of a fun game, and that's a key component to try to make it fun and to start looking at products that are around you. And this is the thing when we started a year ago talking about what firms, products, services do you admire?
Hmm.
And if you think about some of the companies, because for some of our viewers today, they might not think of McDonald's as a stock they could buy, or Apple as not only a phone, but a stock they could own. Can you just list 5 or 6 or 7 companies that you've been interested in during your 1 year journey?
Yeah, no, definitely. So I'm a video game player. So I love playing a PlayStation, which is a Sony product. The game I've been playing lately has been Call of Duty, which is an Activision product. Also on top of that, like Moores and Coors, which is a good stock to have right now, I think. Also, we do our mortgage with TD, so having a bank portfolio in your portfolio is good as well. Also, my wife is very big into Disney, so we've discussed Disney Plus. We have that, so it's definitely something fun to have for sure.
So that's great. So that's what we're really inviting people today. If you haven't really thought about stocks, is to maybe grab a workbook and write down a bunch of names of companies, look around. And this is a process that Peter Lynch came up with about 40 years ago, and in a book, Walking Down Wall Street, where you actually notice all of the companies. And if it's something you like, wouldn't it be cool to actually change your relationship with it and to be able to actually start owning stocks? Yet I think you were faced with number two. And what stopped you from starting investing?
For me, I think what stopped me was really obviously the I guess the lack of knowledge. So I was scared to get into a marketplace that I had no idea about. also the tools at my disposal. I didn't know what was available to use. So for me, like when I think of trading stocks and doing stock exchange, stuff like that, I want to use a tool where I can maybe buy one stock here, one stock there, as opposed to 50 shares of a particular company. Because I know with our previous conversations, we discussed like there's usually like a commission percentage that you have to pay to buy a stock. So for me to buy one stock and pay, I'm not too sure, anywhere between sort of like maybe $9 to $30 in commission, kind of really made me stop and think about, okay, how do I want to do this? How much money do I want to invest? How much money can I invest? So it was really the tools at my disposal at the time that was really kind of stopping me there.
Fantastic. And I think that's what's facing some people today. If they haven't started, there's a gap. And one
Mm-hmm.
of the things that we're hoping to help fill for some people today is you sharing a little bit about how you filled the gap. The fear of doing something new is very common. The fear of making a mistake is very common. And it's this,
Yeah.
there's this element of stepping through. And I think one of the ideas that I think you really adapted to is this consciousness shift, that you don't want to always be a consumer. You've actually made a decision to be an investor. And instead
Mm-hmm.
of just being a viewer, you're actually now this, whether you buy Activision or Disney or the stocks that you have invested in, you're now a stakeholder in those companies. And
Yeah.
some of them will actually pay you a dividend or money on a regular basis to own their shares, which is better than maybe keeping money in the bank.
Mm-hmm. Well, that's exactly what happened too. So like right now we've kind of gone through this influx where I have a little bit of cash sitting in my accounts, and I was thinking, why not put that cash to some use as opposed to just sitting in a checking account earning 0% of zero?
That's right. And so the stocks that you ended up picking, and what I've done is in discussion with you, and again, congratulations on taking the steps. I've put them against sort of against a couple of stocks, so our viewers today could see how you do a basic comparison.
Mm-hmm.
You talked about BMO at Bank of Montreal. I sort of threw up there TD, since you own a mortgage with them, or you have a mortgage with them, or RBC. A couple others that you showed some interest in, SBCE. What's
Yep.
why Space Galactic?
So Space Galactic, so from my sort of understanding, they give a pretty decent, like they're at a pretty decent low right now. When I got them actually at $18.80, um, which for the 52-week high, it's at 42, and the 52-week low, it's at 6.9. So I thought it was actually quite a good middle ground buy there, and it has some good potential. It's a pretty good flyer, I think, as you would say.
Well, I do encourage, particularly someone your age, is to have at least one or two out of a portfolio of six as speculative. And so when we talked about Space Galactic, but also against it would have been Tesla. And one of the reasons why you wouldn't want to buy Tesla is because the shares are so expensive. And
Yeah,
so when
yeah.
you've got a $2,000 portfolio, what we're doing today is going with the idea, if you had $2,000 to invest, how could you invest it, or what could you invest in? So let me just continue with the universe that you narrowed it down to. Then an oil, given that oil's been beaten up, CNQ versus Suncor versus
Mm-hmm.
Enbridge, TAP, which is that we talked about a sin stock that could be gambling or drinking or marijuana, and you sort of came up with TAP or Bud would have been the analysis, and then a real estate, which again is beaten up right now. We decided to take a look at one of the biggest ones in Canada, Brookfield, in three different ways that you could invest in there. And then the one that we've sort of thrown into our audience today, but also something you and I can discuss, is perhaps something like a consumer product or a food like Starbucks or Disney, which could be a service, Yum China,
Mm-hmm.
McDonald's, or potentially even gold or silver, because that is also a way of having some insurance if we do go into inflation. So this was your universe. I threw in a couple of other ones so that we could do a bit of a comparison, because what we're looking to do is develop a diversified portfolio for you.
Mm-hmm. Definitely.
So the idea of diversified, what would you say is the importance of diversification, or what was appealing for you to have a diversified portfolio?
Well, for me, I don't want to put all my eggs necessarily in one basket. So if I have all of my, let's say, all my money in stocks that are all commodities, especially right now, we're all living in a very sort of kind of a scary time. We're in a recession right now, so I wouldn't want to have everything in a commodity this way. If the market does indeed crash even further, I don't want to have kind of a losing stock. So I kind of want to have some flexibility and some ability to be mobile in the market as well.
Fantastic. Again, diversification, it gives you an opportunity to be involved in different types of investments. It also educates you. I think that's one of the reasons why I'm doing this is that I want to educate not only myself, yet others. And
Mhm.
have you been finding the education process pretty useful to study some different industries, have a better indication of the economics, the situation in different fields? How's that been working for you?
Yeah, no, so it's been pretty interesting. So I know we discussed this the other day about having the tools and not having necessarily the same tools because we were discussing one of our stocks that we have here, and we noticed that on your graph with your tool there was no dividend, and then on my tool it had a dividend.
Correct.
So it's just learning what tools we can, I guess, trust, because it's kind of like the same thing, right? With the internet, you can't necessarily trust everything you read. So it's
Absolutely.
having that ability to kind of dig a little bit further to try to find more information that maybe backs up what you're looking to achieve.
Fantastic. So let's go to the first one where we start our analysis and diversification. And in this one, we took a little look at BMO versus the RBC. And if we were to look at some of the key points is that you looked at the 52-week range and
Hmm.
you see that's right now 55 to 104 and it's at 67. So it's at the lower portion of its range.
Hmm.
The other big number that we really liked was the dividend.
Hmm.
Right now, BMO's got a dividend of about 6.3, and then it has an $83 target for the year. And if you compare it to Royal, which again has a dividend of 5.1, a range of 72 to 109, and it's at 84. So ultimately, it came down to, I believe you like the dividend more. Is that correct?
Yeah, for me it was also, I only started with a very limited amount of funds into my account, so I wanted to try to get as many stocks as possible for the dollar I had in the account there. So I like the dividend potential, and then also like the opening bid as well. It was quite good in that price range for me.
And that's like people are asking, are the banks a good bet right now? And I'm saying they're actually paying you to hold their stock. In this case for BMO, 6.32%. That's a pretty nice premium just to hold their stock. In fact,
Mm.
if you got a 3, 5, 10-year view to be collecting the dividend, and even if you have the volatility like you've seen from sort of 56 to 104, what would be nice is that if it dropped down to 56, you didn't get afraid. You might even buy a couple more shares.
And that's the thing I think that I obviously am trying to learn right now is not being scared of the market. If things drop, it's going to come back more often than not. It's not forever going to stay down low.
So let's go to the next one that we looked at, which is you considered an oil, which again has been beaten up lately.
Hmm.
And here you looked at CNQ. I threw in Suncor as another stock to analyze it with. Any one, two reasons why you picked CNQ?
CNQ for me, again, it was based on the dividend. It's quite a high dividend yield percentage. And so, again, it's also in its sort of middle range. It's not at its lowest, but it's not at its highest. And again, it just fit into the cost analysis of my portfolio.
Beautiful. I think that's what you've done nicely is you've picked stocks in a nice price range, sort of between 10 and 40, that allows you to have a few shares. And
Hmm.
again, with CNQ at a 7.87% dividend, that's a nice payment for you. And then a range of 7.8 to 42, and it's at 22. So at the lower part of the range, and it's got some good upside. So again, if you're going to hold it for a few years, it's probably a pretty nice time to make that investment. So I was quite pleased to see you sniffing around at the oil since they've been beaten up. That's what Warren Buffett would recommend as value investing. The next one is the one that we talked a little bit about, that there was a different analysis. And this is TAP, which is, what's your TAP versus Bud mentality of investing?
Well, actually, so for me personally, I'm not much of a beer drinker. Never really have been. But my wife actually is a French teacher, so she does like the Montreal Canadiens. They are owned by Molson, so just kind of something for her in my portfolio.
Nice. That's great because Montreal Canadiens, Molson, actually owning a little bit of the Montreal Canadiens. What a cool concept. And
Yeah,
this is the one that was a little tricky is that when I was looking at Yahoo Finance, I noticed that there was no dividend. And I was actually doing the analysis against Bud, and I saw Bud had a 4.7% dividend. I was going to raise that to you and saying, isn't Bud a better deal? But then you mentioned that maybe the Yahoo Finance's numbers weren't very accurate. And then we both did a little research, and then that's where the middle numbers are there. And if you compare TAP versus Bud, you see that TAP's got a 5.86% dividend versus 4.9. And so that was a surprise to me also. And so that's why, again, why I'm loving doing this. And I hope if any of our listeners is learning something, is send a like, add some comments, add some questions, because I'd like to do more of these type of portfolio analysis and also diversification for different people throughout Canada and the United States, because I'm enjoying it and I get to learn also. Yet you highlighted a really good opportunity here. Your wife owns it. You're now a part owner of a company that owns the Montreal Canadiens or involved in it. And so that's a really cool way to do investing.
Exactly. Definitely.
So the next one we looked at, which is the one we're talking about, because we both observed that the real estate market has been beaten up pretty good lately.
Mm-hmm.
And so 3 ways to invest in Brookfield. One would be if you're a greenie, you might want to have a green, environmentally friendly investment at 4.47% dividend. Own the mother company or Brookfield Management, which has a 1.43. And I'm curious, where did you hear about Brookfield's REIT that's got a 15.07% dividend? And what's your thinking around that?
Yeah, no, that's definitely the next one I'm definitely gonna be targeting, especially with the dividend at that high percentage. I noticed it when I was doing some research on the dividend studies. I didn't buy it at the time just because I was still doing my research and still kind of trying to understand what were the stocks I wanted in my portfolio. But yeah, after our conversation, it definitely seems like it's one that we could definitely jump on for sure. It's at its low range for its 52-week range, so it seems like it's a great opportunity right now.
They just came out last week with their reporting, and it looks like they're not going to cut it immediately. The idea there is you understand your risk too, is that what happens if they cut it in half? Well, if they cut it in half, it's still going to be 7.5%.
Yeah.
Now, if they cut it totally, that would be, again, a red flag, yet they're doing that for a reason. It's because the economy is really looking tough. And so when you got a range of 10 to 27, you're picking it up at $13. You know it's already been discounted. Can it go lower? We know it can go lower, yet are you being compensated for the risk?
Exactly.
In this case, you're looking at one of the best real estate management companies in North America. And actually, I know some of the management there too, and they really come highly regarded, and they're going to make adjustments to the market. So that's a measured risk, and it might be something that to be able to actually get that 15% dividend would be a very juicy dividend. The next one, again, we did a little bit of the analysis on was, and a big reason why you did pick Space Galactic is that you like Richard Branson, you want to be involved in space travel. You would have liked Tesla, but it's, again, the price of Tesla shares just doesn't make it reasonable. Yet you're also involved in a couple of different industries by being involved in Virgin Galactic.
Yeah, no, it was a really interesting stock. Actually, my cousin gave me some more information about it as well. So big shout out to Justin for that. He's definitely very influenced and passionate about Virgin Galactic as well. And that's what kind of swayed me towards this. But yeah, the Tesla cost is just too much for me at this time, but it's definitely a stock that I would love to own in the future.
Super. And so one more, we're going to just discuss a little bit of what you might consider your favorite out of the bottom one is SLV. It's actually silver ETF, exchange traded fund. ABX would be gold. It's the number one gold company, American Barrick. GLD would be the exchange traded fund for gold. MCDs, McDonald's, Yum China, Disney, or Starbucks would be, if you were to add one more in the consumer component or commodities, which one would you be leaning at out of that group?
Out of that group there, to be honest, I haven't done too much knowledge about it. Part of me would want to kind of lean maybe towards McDonald's, especially given the situation right now. I imagine again, I don't know what the impact of the meat shortage upcoming might have on McDonald's, but I have a feeling it would be a good idea now, because I would imagine their stocks are getting a little bit low. Maybe it's close to the low range, but again, I haven't done my research to give you a definitive answer, but I would kind of be leaning towards McDonald's at this point.
And you just mentioned the meat, and that's what's leading to another one that's people are interested is Beyond Meat. And so that's a hot stock right now. And their CEO just came out and said they're going to go for a market share strategy, sort of like Amazon did for the summer, and really get people to try their meat or their artificial meat products to really drive market share for the summer. So I've talked to some vegetarians, and they're definitely going to be looking to buy some Beyond Meat in the next little while.
Awesome.
So let's just review our little strategy here that we've done. And this is the idea for people your age or even younger who are starting their investment. It could even be people who are a lot older who've never invested in the market. Is look for firms that you admire. Understand that you're going to have some hesitation, especially if you're starting something new. Have this mindset of being an owner and starting to learn. It sounds like the quality of your conversations with your family, your friends could be even heightened because you're now talking about stocks. And is that added anything in your life in the last little while?
Yeah, no, definitely. I'm able now to have much more engaging, intellectual type conversations about stocks. Before it was just like, hey, like, wouldn't it be nice to own Amazon? Well, yeah, obviously it'd be nice to own Amazon, but not everyone has $1,100, $1,000 available to do that. But now we're able to kind of shift our focus into more moderately priced stocks that we can actually afford, and again, give us that mobility to grow a portfolio over time, and maybe then acquire something like Amazon a couple of years down the road, stuff like that.
Number 4 is discovering your universe, which is what you're doing by seeing what stocks are available at what price. Diversification. It's nice that you've been able to get a bank that gives you a nice dividend, an oil company is good to give dividend, a real estate good dividend, but you've also got some fun in there that your stock, your Space Galactic can go up and down 5% or 10% and have some fun with that. And then again, I've invited some people to do some paper or mock trading on Yahoo Finance, which will be my last slide. And then what you've done in number 7 is to set up the trading account, whether you use a bank or you go to Wealth Simple Trade or Quest Trade or Robinhood for our friends in the States. Tell me 1 or 2 things that you've learned about Wealth Simple.
Yeah, so Wealth Simple Trade is what I've been using, is the platform I've been using for trading. The reason why I like it so much is to be honest, it's very simple. I am a big fan of doing like sports betting, so using Bodog as my platform there. Obviously, with no sports going on right now, it seems like stocks are kind of becoming the new sport for me. Wealth Simple Trade is very simple. There's no commission structure in place at the moment. So you're able to make one share, another share. You don't have to buy 10, 15, 20, 30 shares at a time. You can really just pick and choose what you want to do in the moment.
Fantastic. And about putting the money in, and how long did it take? What was your process there?
Yeah, so I put it in on a Tuesday, and I think I got access to my funds by Thursday. I'm able to make trades that Thursday, so it was very quick. Again, and it was just really simple. That was the biggest thing. It was very simple. It took the risk and the kind of the fear away, because I don't have to worry about going through a broker or going through somebody that obviously knows way more than I do, and that kind of always gives me a little bit of trepidation dealing with that.
Right. And did you put it into a TFSA, or is it a regular account? What did you do there?
So I actually made 2 accounts. I do have a TFSA mutual fund with Wealth Simple, and then I just made a personal account for Wealth Simple Trade. And so the mutual fund, I'm just kind of maybe feed it a little bit and just let it kind of do its own thing. And then the personal account, I'll kind of be more on that daily kind of checking things and seeing if there's other tweaks that I can do.
Super. And the idea there is every quarter you'll make some contribution. You'll look to build your portfolio, your investment knowledge, your financial fitness.
Exactly. Definitely.
Fantastic. And then the last sort of step was, which I think we just covered, is putting money or not into the account. It's your choice. And again, for some people that might be a little bit hesitant or a little bit fearful, what would be 1 or 2 tips that you might have for them?
Honestly, it's at this point, it's if you have the ability and you have the extra cash flow available, I would definitely recommend it, because it's going to do a lot better than not doing anything at all sometimes. It gives you that potential to win. Um, I think I read something that Warren Buffett said. It's something about compound interest. Either people who know about compound interest do very well. The other ones that don't end up paying compound interest.
Very good.
Very paraphrasing that, but it's something along those lines. And so I took that kind of to heart a little bit and just kind of thinking, I need to start doing something with my money to make it work for me, as opposed to me always working for my money.
Very good, because compound interest is the secret to financial freedom. And this is just a little Yahoo Finance. If I was to take a look at your portfolio, and this is what we had a conversation, I just went on to Yahoo Finance, put it in there, put a couple of shares against the stock. So if you got 6 shares at BMO and 15 shares of CNQ and 15 shares of Space Galactic and 7 shares of TAP, and then 30 shares of BPY, it'd be a $2,000 portfolio. And for a 28-year-old, somebody who's starting out, this is a really fun way to track it if you don't want to put your money in, or if you're ready to put some money in, like Alex has done in the last little while. Just go take a look at Wealthsimple. We're going to leave a link for you to tap into it. It will give you a little gift from Wealthsimple. It also gives us a little contribution. Because one of the things that we want to do is share more information and process and even the mindset of investing. So that's I'd like any of their friends listening, like it, add a comment. Definitely, I'd love to hear what stocks you're looking to invest in, and it might be giving Alex and I some ideas to also make some investments or analysis moving forward.
Definitely, definitely.
And with that, Alex, any last comments to maybe people who are of your generation who are maybe looking at getting involved in the markets, looking to heighten their financial fitness? What would be your tip?
I think right now, especially given the situation that we're all dealing with right now with COVID-19, this is a really good opportunity to get into the marketplace because a lot of stocks are actually quite low right now. So for me, there's not a perceived great amount of risk. Obviously, whenever you're dealing with the stocks, there are some risks involved, but right now it seems like a pretty good opportunity. Again, it doesn't have to be $1,000, $10,000. It could be $100. That's the thing I really like about Wealthsimple Trade. You can really start low, start small, and then see how it goes. And if it's something that you're not interested in, that's okay. But if it's something that maybe feeds a hunger inside of you, then you can see your portfolio grow and get bigger over time. Definitely.
Well, fantastic. Thank you so much for your time today. It's
Yeah,
been
no, thank you
great,
very
and
much for
I
having
hope
us.
we could do more of this because I get to learn, you get to learn, and hopefully our viewers will get to learn. And again, please add a like, add some comments, or subscribe. And so, thank you so much.